All right, traders, buckle up. This week is loaded with CPI, PPI, and expiration right on the heels of FOMC and the BOJ for next week. Everyone is talking about September seasonality being bearish, but the data is telling us a very different story. And here's the kicker. The commercials just hit the highest net positioning in a year on the VIX, and Bitcoin open interest has dropped to the same level that has triggered double-digit rallies in the past, such as 36%, 62%, and 80% in the past. Now, that's not noise, that's signal. In this video, I'll break down the key market setups I'm watching based on the CFTC data positioning data, macro catalyst, and price action. If you're following my newsletter, this will bring it all together visually. Let's get into it. So this week we'll be doing something quite different. Rather than start with NQ, I wanted to make some quick observation on what I'm seeing on the VIX. And this is the upcoming expiration that's going to be on the 10th of Wednesday next week. And one thing to note is the fact that when VIX expiration occurs before the OPEX, the likelihood of a performance flip drops 58%, meaning we don't get to see a reversal of the intended trend. Now, I'm trying to spot gamma for this data. Now, what do we see in the past regarding the VIX whenever the VIX expires before OPEX? Starting from June, we had made a bullish case for the indices to keep going higher, right? However, what do we see on the VIX in June? In June, we had the expiration before the OPEX window. The OPEX window was on the 20th of June, right? So we had a week ahead of it. And what happened then after the expiration? We see a consistent drop in the VIX, and this precipitated the bull run towards the close of the month of June. This is simply because we had VIX that expired before the OPEX and in line with the trend, meaning that there was no flip in performance, meaning for it to go the opposite side. Now, the goal with this information is that we have to use the positioning in the NQ or the S&P 500. We have to check and see if the non-commercials are overcommitted or not. If they are undercommitted, then that would precipitate higher prices in line with the VIX, then that makes sense for us to keep on rising. In the month of July also, we can see that we had the expiration before the OPEX expiration. Now, for the OPEX expiration, we had this in July the 18th. Now, July the 18th, after the OPEX window, what do we see in price again? A consistent drop in the VIX, and this in turn supported higher prices in the indices. You can see this spike that happened. We recall that this was actually the August 1 very bad non-farm payroll and revision to multi-yellows, right? So that gave a rise to a spike in the VIX. Because we know that the VIX is being contained from the data, we saw continuous drastic drop in the VIX, and this in turn supported equity higher prices. Now, in the month of August, which was last month, we also made reference to the fact that we were in a window of weakness in the third week of last month. This was simply because we saw that the non-commercials were heavily committed on the long side, and we knew no, they must be punished. And that was exactly what we got before we had this um spike here. I believe this 22nd here was actually the Jackson Hall, yeah, the Jackson Hall symposium. That was Powell, and this tanked the entire market. But we were still certain that the non-commercials were heavily committed on NQ, and that was what caused this spike. This was last week Tuesday. I remember in our notes from last week Tuesday. From here you can see we highlighted here the fact that we wanted to see a bearish tilt on NQ into the Tuesday because this was simply because we saw very high amount of commitment on the long side of the non-commercial. So that was not healthy for the market. And that was what sparked this VIX to clear out those levels, but then continue lower. So we would love to see how the next contract expiration for the VIX rolls lower when we see the next OPEX window. And this is why we were actually excited this week on NQ. So, but before I go into NQ, that was my observation on the VIX in terms of how it actually affects the equities market, how that we have very interesting price action whenever the VIX expires before the OPEX, and we want to see consistent decline in that. Now, from the CFTC data, The gold here is the fact that the commercials keep on adding more and more long positioning, making their net position positive. Now, as far as this continues to go higher, they keep increasing it. This continues to compress the VIX to the lower downside. We've talked about this several times about the fact that higher net positioning by the commercials is actually bearish for price, and this has been the case consistently since April. This is the April low, and that was why we're bullish on equities generally. The only windows of opportunity of weakness rather were during the OPEX window. Whenever the non-commercials were overcrowded, we knew these were turning points in the market and had to be very careful. Wait for them to be flushed out, then we can continue the trend. So next week should be interesting for us to watch how this expires, look at the contract rollover upon the next CFTC data, and know how they are thinking about the market. So that's starting out with VIX this week. Following, now we have to go into NQ. What do we see on NQ? For NQ, last week was quite interesting. We called for a bearish tilt into the close of Tuesday, and that was what precipitated price to flush out the lows here. But not just that. Let's look at positions. It dropped about 10,000 contracts in long commitment. That's very good because it means that you're in position to this bull market. But also, we see an increased position. I think this is just simply them trying to catch the fall on that particular day. All of it should be flushed out, right? And this should give us very good data to keep looking for more bullish price action in the market. So we still see bullishness in the index market to keep continuing going higher. How high? I don't have interest in. All I want to see each week when I come to my chart is to see, are they positioned moderately or they are overcommitted, and overcommitment is not good for me, and we want to flush that out. Next week we have the CPI coming out and the PPI. So it's going to be a week for us to take very good attention at how the data prints. Lower numbers in the CPI and the PPI is going to be good for price action, for higher price action. But let's not forget we have the actual real just the FOMC rate decision coming up in 2 weeks from now. So that's where the real juice. But next week, focus is going to be on PPI and the CPI number. So that should continue to be the driving theme in the market. So next week is more of an intraday news trading from CPI and PPI. However, it prints. Buyers is bullish. Of course, moving forward. For DXY, we have the same thing. I cannot for sure commit to how that's going to turn out for the dollar, because a rate cut should be bearish for the dollar, and that could potentially mean we take out this low. But notwithstanding, I remain to see how that happens. So next week, focus again is still going to be on the economic calendar, which is going to be the PPI and the CPI. So that remains the case. We see very bullish positioning by the commercials, and this is an underlying story. We said that we wanted to see short interest by the non-commercials to the tone of 20,000 on the short side for us to be bullish. Until we see that, we are actually going to skip sidelines and just look the economic calendar, because we need the non-commercials to be overcommitted for them to be punished and then we take the other side. So if that doesn't happen, nope, we stay out. Now that's for the dollar. Today, the most interesting data again has been Bitcoin. Bitcoin continues to be my favorite outlook in this market on how the market has been playing out. So let's take a wider look at what Bitcoin is doing and what is the story we have here. Looking at positioning, we've been calling for bullish price action on Bitcoin since the beginning of August, and we also made note that the idea is to get a signal from Bitcoin, and you then use relative strength with other altcoins to catch the move after each Tuesday close. And that was the case for Ethereum outperforming. That was the case for Solar outperforming, right? And last week we had a very, would I say, downbeat week, because upon Tuesday close, the leader that week was actually Solana. So take a look at Solana. So Solana closed here, but we didn't see any major outsized reaction as we actually wanted. So the trade is still there, right? Nothing, no fireworks. This week we saw a dip in the open interest to a 1 year low, which is at 26,000. Now, this level is a very clear level for we to see very juicy price action. Now, Bitcoin's response is to go to the high level, but the real story is not in Bitcoin, the real story is in the altcoins and how the market perceives this. Now, For us to give context to this, you would have to read my Substack post. I have it much detailed there as to what the price do every time price came to this multi-year low open interest. I have some dates marked out here, so let's just take a look at it. What happened in April the 8th? So April the 8th, we would have upon the close of April 8th, we knew just look at this fantastic price action, all because open interest went back 26,900, and this precipitated a very interesting amount of return. If I use to the all-time high, there's over 39,000. I think I stopped at the close of the Tuesday, which is where I prefer to look at. So it's way more. This is only because we have open interest at this kind of level. Now, the next time we saw very interesting low amount of open interest was on the 29th, which was somewhere here. And as you can see, it also added more to that fuel that we noted from the 8th of April. Secondly, or rather thirdly, we have September the 3rd. What happened September the 3rd? September the 3rd, we saw price upon the close of September the 3rd close, we can see a consistent rise in price even into December for that. And if we measure upon the close of Tuesday somewhere here to this kind of high levels, which was very, very high, these were several pips high. This is over 80%, but to the very high one more time. This was it over here. Close of close of the 3rd of September, draw that high. All right, so let's switch to the weekly time frame so it's cleaner. So let's come back here now. So to the close of the 3rd of September, where is it over here? So from the close of 3rd of September, this is particular week, and then yeah, so we saw a whooping 92%, and that's very, very interesting for us to observe and see. Also, we had another time which was January the 30th. January the 30th of 2024 was also interesting. This was the week here, so somewhere here. If we compare this as well to this gave us a rise of over 62% plus as well. So my point is this: open interest at very low levels are very, very interesting for the market, and this can precipitate very juicy price action. All right, so if we had this kind of movement in Bitcoin, what then would we have seen in altcoins? What altcoins come to mind? Okay, let's take the popular altcoins everybody know, XRP. XRP price action too would be interesting for us to see. Take for example from the April lows, which was April 8th. What do we see in price action? April 8th was somewhere here. I believe, yeah, this was April 8th. If you draw this out on how high the market went, that was over 81%. This literally dwarfs the 36% we saw on Bitcoin. If we also take a look to as well on September 3rd, uh, September the 3rd was somewhere here, right? And if you marked it how high it went to as well, just conservative level, so it's 457. This dwarfs the 92% on Bitcoin. Finally, January of last year, did we have any movement here on XRP versus Bitcoin? This is somewhere here. I believe this was January here. So let's mark that level from here, close of January, and it went fairly as high up to 40%. So Bitcoin outperformed this particular coin this season. So again, you can do this across other altcoins and see how the results were. It's not just important for you to pick any altcoin. You have to be able to tell what the narrative are in the market. I believe back in January 2024, the narratives were about AI agent, just about gaming as well. I believe so. Gaming coins, AI agent, and DeFi projects were very, very prominent back then. So now the current narrative in the market is actually the DeFi project as well as the IS compliance coin. So that's going to be interesting for us to see moving forward. So that's what I'm going to share regarding Bitcoin. I find it to be quite interesting. Finally, on GBP continues to align with what we want to see, right? So we still see 6 month high increase in the commercials position in British pound. We are still waiting for the rate decision and the contract rollover for us to be able to have a fair analysis of the intent of the commercials, which is bullishness, and that would precipitate a downward pressure on the Euro GBP pair. We keep watching for that, and that remains to be on the card for us to observe. Let's take a look at GBP. How does it look like? GBP, nothing exciting here, and we still want this level to be flushed, and that would also as well support prices higher. The Euro GBP pair two is still here. We're still waiting for reasons for us to fade this lower. I had this hypothetical trade on here since here, but of course we had several signals to close out on this idea. But we still, I just had it here just for me to just see and analyze again. We keep watching to see how the ECB interest rate decision happens on September 11th, how the tone is on what they're saying and what they're focused on, and then finally the Bank of England official rate decision. So that's going to be pivotal for how we're going forward. I know this is quite a long one, but it's just me outlining how I think about what I see in the market and what is to come. To come. So next week, the focus is going to be on PPI or CPI for intraday price action. And we want to see how crypto closes on Tuesday close on Bitcoin for us to see if there is more interest for the market to keep on going higher. Now, that's it for this week's COT Outlook. If you found this helpful, like and subscribe and drop a comment if you're watching any of these setups too. If you want to dive deeper, the full write-up is in my Substack, link in the description. Stay nimble, stay sharp. See you next week.